On April 2, 2025, a significant shift shook the global energy map. While headlines focused on Donald Trump's escalating trade war, Canada's quieter but more impactful story unfolded. The long-delayed $34 billion Trans Mountain Pipeline expansion, TMX, was finally operational, and with it, Canada rewrote its energy destiny. Nearly all of Canada's oil exports flowed south to the United States for decades. But with TMX now pumping 890,000 barrels a day toward the Pacific, that old dynamic is crumbling. The pipeline doesn't just move crude oil, it also moves geopolitical power from Washington to Beijing. As Trump reignited tensions with steep tariffs, China saw a golden opportunity and pounced. In early 2025, China's refining giant Rongsheng Petrochemical opened its first Canadian office in Calgary and struck a major deal with Suncor Energy. Oil that once flowed exclusively to American refineries is now charting a new course across the Pacific. Canada's pivot toward China is no longer theoretical. It's happening. And it's leaving the US vulnerable just as global energy competition heats up, especially with electric vehicles and renewables, transforming how nations view oil and gas. This isn't just a trade deal. It's a massive geopolitical recalibration. And it's only the beginning. The Trans Mountain Pipeline expansion, Canada's strategic move. The TMX project was never meant to be easy. Troubled by legal battles, environmental protests, and skyrocketing costs, it took nearly a decade to complete. But when it went live in May 2024, it tripled the original pipeline's capacity from 300,000 to 890,000 barrels per day. This isn't just more oil, it's more convenient. For the first time, Canada can deliver large volumes of crude to Asia's booming markets, especially those in China, Japan, and South Korea. The impact was immediate. In March 2025 alone, China imported a record-breaking 7.3 million barrels of Canadian crude from TMX's terminus near Vancouver, more than double the volume from the US, which has seen its oil exports to China plummet. Thanks to pipeline bottlenecks, US refiners enjoyed Canada's crude at abrupt discounts for decades, often $10 to $15 below global benchmarks. Now, TMX allows Canadian producers to avoid that bottleneck and chase better prices across the Pacific. That's not just a win for Canadian oil companies, it's a loss for American refiners. The upgraded Westridge Marine Terminal in British Columbia is now a strategic gateway. It's already rerouting oil to South Korea's GS Caltex and China's Rongsheng, and plans to ramp up even further. These aren't one-off deals, they're long-term commitments. And with oil now flowing west in record volumes, the message is clear. Canada is no longer America's energy sidekick. It's becoming a key supplier in the most important energy markets in the world. US tariffs, a catalyst for change. In March 2025, Donald Trump reignited trade tensions by announcing a 10% Canadian oil and gas tariff. That single move endangered around 4 million barrels of daily exports and sent shockwaves through Canada's energy sector. For the United States, it was a political strategy. For Canada, it was a wake-up call. Until then, Canada had depended heavily on the US as its top oil customer. But the tariff made it clear that depending on one market, even a neighbor can be risky. As Canadian oil producers faced a potential $10 billion loss in annual profits, the country accelerated its search for alternative buyers. That's when China stepped in. Trump's tariffs not only hurt Canadian companies but also threatened to raise prices for American consumers. US refineries process over 60% of their oil from Canada. According to Goldman Sachs, gas prices in the US could increase by as much as 80 cents per gallon if that supply becomes more expensive or unreliable. That's the kind of increase that sparks anger at the pump, especially during an election year. Canada didn't wait around. Within months, it rolled out a $6.5 billion global markets accelerator plan, offering direct support to exporters targeting Asia. China, with its growing energy needs and tensions with other oil suppliers like the US and Russia, became a natural fit. Trump wanted to pressure Canada but pushed it straight into China's waiting arms instead. China's strategic moves. Enter Rongsheng Petrochemical. China is playing the long game and it's playing it smart. Rongsheng Petrochemical, one of the biggest oil refiners in China, opened its Canadian office in Calgary in March 2025. That move was more than symbolic. It was a statement. Within weeks, Rongsheng signed a multi-year deal with Suncor Energy, Canada's leading oil company. The agreement secured 200,000 barrels of oil per month starting in June 2025. Oil that would travel through the new Trans Mountain pipeline and head straight to China's massive refineries. But that's not all. Rongsheng is now in talks with other major Canadian oil players, including Cenovus and Canadian Natural Resources Limited. These companies produce hundreds of thousands of barrels every day. If deals go through, China could secure up to 10% of TMX's total capacity by 2026. What makes Rongsheng's strategy even more powerful is how they buy the oil. They're using FOB terms, meaning they control the shipping once the oil is loaded in Canada. That gives them the power to redirect it to other countries like Japan or India if prices rise, boosting their profits by $2 to $3 per barrel. Industry experts say China's interest in Canadian oil is not just about fuel, it's about power. The more energy China can secure from stable, non-hostile sources like Canada, the less it depends on politically unstable regions like the Middle East. This isn't just a business deal. It's a strategy to reshape global influence, and China is making its move. LNG Canada, expanding the energy portfolio. Oil isn't the only thing Canada is sending across the Pacific. Liquefied natural gas, or LNG, is next. LNG Canada, a massive $40 billion project in Kitimat, British Columbia, is almost ready to begin operations. Once it goes live in late 2025, it will export up to 14 million tons of LNG yearly, mainly to countries like China and Japan. The facility recently entered its final testing phase, known as the cool down, where systems are prepped to start chilling gas to its liquid form. This step brings the project within months of shipping its first cargo overseas. Canada has long been rich in natural gas, but until now most of it was sent to the US via pipelines. With LNG Canada, things are changing. This terminal gives Canadian producers access to fast-growing Asian markets, where demand for clean-burning gas is rising. China, for instance, is using more natural gas to reduce its reliance on coal. This shift also helps Canada become more than just a supplier of raw resources. As one official put it, Canada isn't just shipping fuel. It's exporting energy solutions that support economic growth and global climate goals. Hydropower, Canada's renewable edge. While oil and gas are the stars of Canada's energy show, hydropower plays a strong supporting role. Canada generates most of its electricity from renewable sources, especially hydropower. Provinces like Quebec, Ontario, and British Columbia are leading the charge. In 2022 alone, Quebec exported over 22 million megawatt-hours of clean energy to the US. But this flow of electricity has recently slowed, particularly to places like New England. Experts say this is a sign that Canada is shifting focus. Rather than relying too heavily on any single customer like the US, it's now looking to balance its exports more evenly. Hydropower also gives Canada a significant advantage as global energy systems begin to favor cleaner, more sustainable options. It strengthens Canada's position, not just as an oil exporter, but as a green energy leader too. Geopolitical implications. Redefining energy alliances. This new energy strategy isn't just economic, it's intensely political. For decades, Canada and the US enjoyed a stable energy relationship. However, as the US has added tariffs and become more unpredictable, Canada is building new bridges, especially with China. This shift changes everything. China, eager to reduce its reliance on unstable regions for oil, sees Canada as a steady partner. Canada, in turn, sees China as a way to diversify and gain independence from the US. This alliance is quietly redrawing the global energy map. It's also forcing the US to rethink its strategy. American refineries were built to process heavy Canadian crude. Replacing it won't be easy or cheap. Alternatives from Saudi Arabia or Venezuela are more expensive and more complicated to secure. Experts warn, if the US doesn't adapt, it could lose its energy edge. Environmental considerations and future outlook. Canada's pivot to Asia isn't more than money and markets. It's also about managing climate responsibilities. While oil and gas remain central to its strategy, Canada is investing heavily in cleaner energy sources. Hydropower continues to grow. With LNG, the country is promoting a fuel that burns cleaner than coal or oil, which is especially important for Asian nations trying to cut emissions. The goal? To stay relevant in a changing world without ignoring the climate crisis. Still, this shift isn't without risk. The Trans Mountain Pipeline runs through sensitive coastal areas in British Columbia. Environmental groups warn that even a single oil spill could devastate marine ecosystems, hurt tourism, and damage the fishing industry. Canada has committed $1.5 billion to a marine spill response fund to address these fears. But critics argue it may not be enough if disaster strikes. At the same time, Canada is betting that the world will still need oil and gas, just cleaner, more responsibly managed, and from stable regions. This is where Canada sees itself: a reliable energy provider in a messy, uncertain world. Looking ahead, Canada hopes to balance energy exports with climate goals. It's a difficult path, but the country is trying to walk with both eyes open. Canada's emerging role in global energy. Canada's energy game and the global balance of power have changed. With the Trans Mountain expansion flowing, LNG Canada is about to launch. China is locking in major oil deals, and Canada is stepping out of the US shadow. It's no longer just a junior partner in North America. It's a serious energy player on the world stage. At the same time, the United States is feeling pressured. Trump's tariffs, which are meant to protect American interests, are pushing allies away. Canada is now strengthening ties with China, not out of politics but of practical necessity. This shift comes just as the world moves toward electric vehicles and greener energy. Canada is adapting. The real question now is, can the US catch up? Or is it already falling behind in a new era of energy alliances? One thing's for sure, the global energy map is being redrawn. And this time, Canada is holding the pen.